All right, 1, 2, 3. Can I get a volume check? Volume check. Any volume, anything at all now. One, two, three, 1, 2, 3. Volume check on this. I think I got volume now. This is a trial run, final trading day of the month of June, June 30th, 2026. Here I am. Camera's not working, folks, so we're just looking at my screen. No camera working. Try and just stream the final close. And we really only have 23 minutes until the market closes. There's an additional 15 or so minutes to trade the ETF QQQ or SPY. We're seeing a slight sell pressure when we look at the 10-minute here. So the chart here, both sides of this chart are essentially showing the NASDAQ futures. On the right, we're seeing the NASDAQ futures on a 10-minute chart. And I really wanted to focus on showing the futures with the lower studies. So the MACD, the DSPI, and the Money Flow Index MFI. These are, the MACD is pretty well known. The bottom two indicators are some pretty custom indicators for understanding momentum and direction. And the concern was that when you look at the entire day's range, like we've just been in a large uptrend, we really did achieve, based on the QQQ Before the Bell report. I should open that up. Oh, my bad. So when we look at the most recent report that I issued, which is episode 69 here, I was showing that we really have the first upside extension target, $736.50 if we have the gap and hold, based on how we trade relative to the pivot, $730.50. This was, issued today at around 7 a.m. And that pivot, when we look at, does the report should have the pivot. When we look at, so the traditional pivot versus the gap pivot, 30,315. So we really opened beneath that gap pivot because the idea that the futures session here, there should be a 10-minute as well. The idea that this pre-market would be trading relative to the midpoint between Monday's high of day and the first extension above, that idea didn't play out as much as anticipated, obviously. Instead, we got the open just below Thursday's low, or sorry, not Thursday, Monday's low. We opened just below Monday's low, and continuation after that first 10-minute candlestick, you have movement higher for the first hour. The back test is holding higher lows relative to higher low, relative to low day. Higher lows result in higher highs pushing higher. And this is really just a clean uptrend that tested the first upside extension. Upside 30,560, 30,960. High of day 30,599.75. So the upside extension based on the gap and hold, we relative to the close, when you look at the session of futures, where we were closing relative to where we were opening, it's a very minimal gap overnight, and it was immediate buy pressure. When you look at the lower studies as you're coming in to the open here of the NQ futures, what you're seeing is the buyer's strength is gaining while the seller's strength is declining, and fair value here on the MACD Fair value is ready to break above the moving average line, and that break from beneath the zero line breaking above. That's how you really use these indicators and understand that there's more potential to climb higher when you're breaking above the moving average line from beneath the zero line than if you were doing that same movement from above the zero line. So it's pretty interesting to see what has happened thus far. I need to double check that data here. I was seeing some weird values when I was looking at my... I can't actually show you this data because it's against the rules with Thinkorswim's program. You know, it's not really your data, it's their platform's data. You just have access to the data and so forth. So I can't technically transform that data in an Excel sheet, pulling live real-time data into an Excel sheet with the real-time data RTD function and then transforming that data into a gamma exposure tool. Can't really communicate that, but I can say that based on my analysis of the gamma exposure, I would not anticipate a very volatile close. I would anticipate something that's more muted because we're seeing gamma exposure with a large positive net gamma exposure. And when gamma exposure is positive, we typically see the market makers. It's like, imagine when you're trying to drive a car and your e-brake is up. If the e-brake is pulled up and you're trying to drive your car forward, it's not going to move that well compared to if you have the e-brake completely down. That is essentially what happens when you have a net gamma exposure that is positive, is that it's like whatever directional move is occurring, the market makers, they don't really need to hedge in a way that reinforces that trending move. It's more of a muted move. If we saw a large negative gamma exposure, then that would imply that there could be more of a volatile close because whatever directional move occurs, the market makers have to hedge in that position. So right now we're just really consolidating here. And we're basing now, trying to consolidate above that first upside extension target that was provided. I'm checking some data on my side monitor very quickly here. Just trying to understand if there is room to the upside into the close, and I'd want to be hedging for upside. I think that is what I would want to do right now, but I think the move is starting to unfold. Like I should have been hedging a few minutes ago instead of simply monitoring and observing. I really should have been hedging at that 940 consolidation of higher lows. I think I'm going to start doing like an options, like $100 account challenge type of thing. So the 737 puts, I think, are worth investigating. Like if we're going to see strong rejection and some sell pressure, I would think the 737 puts make sense. Let me think about this for a few minutes before I just jump into it, because we might actually close well above 737, so those puts expire worthless. I want to just double check the math that I have here before I do anything stupid. So we're just kind of hanging out, consolidating here. It hasn't gotten too clear if they want to move it higher or lower right now. Seems like they're kind of stuck at the moment. The question really becomes, can the buyers squeeze us, or are the sellers going to have some profit taking? Can't really tell what they want to do into this close, if I'm being completely honest. I would think that there's like a slight sell pressure for just profit taking, but they could just keep squeezing it higher. It's not really showing clearly. I think that one of these at 80 is worth it. I'm just gonna drop the order there and see if I can fill. I'm actually gonna just, so they're trading at 83, 80, 82 on the bid right now, these puts, and I'm not giving financial advice. I'm just trying to like think through my thoughts of like, if we actually sell, the 737 strike is the one that would move in the money, but there's no guarantee that they do move in the money. And why buy them at 75 if you can buy them at, 60 or 55 later? And it's really not clear what direction they want to break us, so I don't think it really makes sense to like leave an order there and like fill at one price. Then you could possibly get a cheaper price. We're about to experience volatility, so we're at 350 almost. You're gonna see there in a few seconds. Yeah, we got like 10 seconds before this volatility candle. It'll have like a really wild pop or a drop, and it'll fluctuate radically. So let's just see what happens here. I would think these puts might move nicely. Um, yeah, that sell there. Does the sell get bought back up, or see if the sell is immediately purchased, or if they have continued sell volume? So that's just like the last time of day, 3:50 p.m., for the algorithms to get their order flow into the system. Yeah, that order at 75, 80 would make sense. Now they're trading at $100 a contract. So the idea of hedging with the shorts does pay slightly. The question is, do you really get a decent retracement of the intraday range or no? So that first minute stick had full sell. Let's see if the following candlestick is going to close at or above 50% of the open close range. That'll really determine if we have continuation of a sell or if the buyers are going to step in and squeeze this. Because the data I was looking at, it's kind of confusing what price they really want to pin us at, based on the exposure. I'd almost think they want to pin us higher. I could be completely wrong and we just keep selling, but the gamma exposure makes me think we have a small bounce. I'll leave an order at 40, I think would make sense. One at 40 and a stop loss at 20. For the call side, I was thinking of just taking a hedge for the call side, but I hesitated. So I missed that order fill. Not a big deal. All right, I pushed the order up and filled at 45. Drop this stop loss at 20 now. And just see if we get the end of day bounce, because I think that movement lower followed by immediate buy side liquidity might end with like that squeeze to the upside into the close. So I just thought like, a small scalp might be worth it. I'll show you the order fill in a minute. I just want to make sure that I get my exit set. Like, I would like 80, but they're trading 71, 72, and there's no guarantee we keep squeezing. We're just gonna hold this. Like, it's one contract at $40. They're trading 78. Normally, I'd like to sell at 100% gain, but we're just gonna sit in this thing and see how far we can really climb today, folks. Because I don't want to cover at 80 and then they go to like 180. So I probably should have just covered it if I'm being honest. But I'll be a smart boy and just stop loss at 60. Here, this is what it looks like. So it is a real options account, and the buy at 45. The stop loss is now 60. I chose 60 because it's like a 50% gain, but it's also that 50% retracement. If we backtest that 50% of the prior 1 minute candles range and we're stuck beneath it, I don't really want to be in that trade. So it'll probably stop me out. Yeah, and they filled me at 58, so whatever. They probably rip it now that I stopped out. I probably should have just sat in this the way that I wanted instead of moving the stop loss to 60, but it is what it is, man. I don't really care. Let's see what happens here. If we can actually get like a little pop, or if this is the full extent of the end of day range in the final 4 minutes. There's the extra 15 after the bell as well. So So there's some decent volatility here, but the sellers push it down, buyers push it up, sellers push it down. Need to clear this area here. See if there's like I don't love the it seems like there's like headwinds where there's like we're near upside resistance, so the idea of like squeezing further is possible if late sellers have to cover their short positions and buy back the market. That's when you kind of see that squeeze action. There's no guarantee that that happens, and there's just no real clear. Maybe 738 would be achievable if the gamma exposure wasn't positive, but since it's positive, like they don't really need to hedge violently into this end of day move. But maybe there is just like a pop into the close regardless because shorts have to cover. It's not very clear at this moment. Hard sell there. Wow. Hard rejection off that area. Wow. Look at all that sell volume coming. See if we retrace back 50% of that candles range. If we're stuck beneath that, I think then you would actually get the sell volume into the close. Yeah. They're not squeezing it higher. No. Yeah, those 737 puts were the move instead. I should have filled on those. Wow. You serious? Fucking shit, man. That 737 put was money. Fuck, man. Pretty wild. I did not expect that amount of volatility into the close. I mean, it's a range of 60 points in the final minute stick. Interesting close. See what happens in the final few minutes here, if there's any final volatility or not. I don't see anyone in the live chat with questions, so I think I'm going to cut the stream here. This was just a test run to see if my laptop could really handle um, working OBS and Thinkorswim, a Google Chrome tab as well. You know, the before the bell report here, I don't really give a bias anymore of upside or downside preference. I really just want to make it clear like this is the infographic that if you follow understanding, how price trades relative to the pivot, that gives you the bias for the day. And there's plenty of context within the report. Um, the volatility section has grown pretty nicely with the amount of detail, just making sure it's clear that when you look at the entire year of 2026 so far, 80% of this year has had a range of 1% or greater. So when you understand those statistics, it can help you in your estimation of range and try to capture the full range of a trending move. So that's the whole point of issuing this QQQ before the bell report, is to help traders as much as possible, give the macro picture. But I really like using these infographics, trying to make it into a clear decision tree that, based on how we're opening relative to the pivot, will determine, and how that structure holds relative to the pivot in the first 60 minutes, the first 90 minutes. That information really sets the trend for whether we have a gap and hold, a gap and fade, fade then reclaim, a full gap fill, or if it was more of a compression day. And you could see today we had we didn't really have any clear scenario align with the actual price action, taking into consideration how the prior day's Fibonacci retracement here, prior intraday range, you did open beneath the high and then immediately broke back above. So it's pretty interesting to see the discrepancy between how price formed in reality relative to the levels of the prior day versus what was anticipated in the framework. It's always good to see. I'll be doing some more back testing to really validate the data within the framework and try to make sure that it's more rooted in statistics than um, anecdotal evidence, I should say. So if you like this kind of content, please like, comment, subscribe. It helps with YouTube and the algorithms. Until